So just exactly how much are closing costs? We're going to answer that question today, but first, my name is Eren Millam with Premier Property Group. I help people achieve financial freedom and security through real estate. So if you're buying a home, the closing costs are actually the cost that it takes you to acquire the loan. So it's not based on anything really other than how much is the home and how much is your lender charged for their certain fees. So different lenders, I know this is shocking, different lenders from different companies charge different amounts. So a lot of lenders will charge a higher interest rate, but they'll have lower closing costs. So it's going to cost you more each month, but it'll cost you less upfront. Some are vice versa. They charge higher closing costs and lower interest rate. So you've got a higher amount up front and then lower payments throughout the extent of your loan. So let's say you are buying a $400,000 home. Typically, your closing costs are going to be around 2.5% to 3%. So anywhere from like $10,000 to $12,000. I have seen some lenders who charged quite a bit more, upwards of $15,000. For the most part, I don't think we have any of those in this area. If we do, I don't recommend them or use them just because that is quite a bit outside the norm. For the most part, the interest rate is only going to be off maybe 1/2 of a point. So it's also something you can buy down. So typically I recommend that people go with a lower cost of closing just so there's less money that you're having to pay. Another option, if you're working with a good realtor, depending on your loan type, and even with conventional, you can get closing costs paid, although that is less likely. But in this area, a lot of the loans are FHA, USDA, VA. These are loans that it's very easy to negotiate to get your closing costs paid from the seller. Now, sometimes the seller will say, hey, it's a seller's market like it is right now in Lewis County. They'll say, hey, we will pay your closing costs, but you're going to put it on top of the loan amount. So if the home is $400,000, the agreed upon price would be $412,000 with 3% going towards your closing costs. So that's how that works. Closing costs, you're going to pay for them one way or another. Either you're paying the full amount up front when you purchase the loan as part of the package for buying the home, or you can spread it out over 30 years, the life of the mortgage, while you're buying that home. There's two ways. They're always going to be there. And sometimes you can delay them or you can pay them up front. Hope that helps. If it does, give this video a like. And if you're on YouTube, consider subscribing. That way people who have these same kinds of questions can find this video and it can help them. If you have any questions, feel free to leave comments down below. If you are considering buying a home and just have questions, you can just put in the comments below considering, and I'll be happy to reach out to you and make sure you get all your questions answered, whether we work together or not. Again, my name is Eren Millam with Premier Property Group. Never settle for less than extraordinary.